Today, I'm going to talk about the etiquette or the expectations you may have as an investor when you invest in real estate syndications. One of the questions you might ask is, what the hell do K1s take this long? First of all, a primer into K1s. When you invest in a real estate syndication as an investor, in the beginning, around March or April, you get a text document called K1. You can think of it as one of the forms that will be used by your CPA on the individual level. I am not a CPA, so everything I said, please don't take it as legal advice. The moral of this video is just to have some empathy for your operators or general partners. So why does it take so long? First week of January, everyone kind of slacks off.
I don't want to work.
Real activity doesn't start until January 8th. At that time, your general partner will engage with a CPA firm, or they may already have signed something the year before. And just keep in mind, general partners don't like working on taxes. Nobody likes working on taxes, including myself. Then the CPA couldn't do anything until the financials for the last years are ready. That is not until January 20th or January 22nd. January is basically gone. They'll get the financials and they will send it to the CPA. At this time, if the general partners, I will use the word general partner or operator or syndicator or sponsor, they all mean the same thing. So if the operator just acquired the property the year before, then you need what's called a cost segregation study, which is basically an advanced form to save more money on taxes. And that study wouldn't be done probably until February as well. This only applies to new properties. It doesn't apply for properties that have filed taxes. Here's the trick, by the way, if you're a general partner. Even if this is your first property and you're waiting for the cost segregation study so that you can take advantage of the bonus depreciation, you can actually fill out everything and then the cost segregation study can come in. That part is just very incremental change. So don't block the CPA starting on the K1 preparation, but that's just a tip to the general partner. Third reason, your investors could invest as an individual, as a joint tenancy or married couple. They could invest as an entity or through a IRA custodian, which is one of the best ways to invest, using your retirement money to invest. In that cap table generation, general partners have to go back to the investors and say, hey, make sure you fill this out and you make sure you fill this out correctly. So there's a lot of back and forth to generate that cap table to the CPA. The general partner has to send out the email, the investors has to fill in, and then there's always those few investors that just take forever to fill out those necessary tax information. Usually that's done through an investor portal. I don't know anyone nowadays that uses a spreadsheet to keep track of it because first, it's not secure at all, and second, it just doesn't look very professional. The fourth reason, which is CPA is absolutely overwhelmed.
What I would hate to see is for you to get overwhelmed.
At this point, we're talking about late February. That's when they get all the information for the CPA to get started. CPA has a problem because right now is one of the busiest times in the year. The new tax code is passed in 2017. The major tax reform that was before that was back in 1986. So what that means is that even if there are a lot of CPAs on the market, not all of them are very good, which means the people who take the time to study the tax code is actually very few and between. And also within the tax code, that the real estate section is actually the longest and the most complex section. All of a sudden, you have a labor crunch, you have a new tax code, this is the tax season, and the real estate syndications become more popular. So you have this triple whammy that causes the CPAs to be just overwhelmed. So usually the CPA is like, first week of January, I stop taking clients. If you have a great general partner, they probably start the process back in December and they'll be like, yeah, use some reasonable December numbers and so on. Now it's early March and the general partner is panicking. Oh my gosh, I haven't gotten everyone's information. I already told my investors that it's due on March 15. What do I do? The general partner in the first week of March probably will have to pick up the phone and text a bunch of people, say, yo, please go to the investor portal and fill out your information. And they probably say it nicely, hey, hope you're doing well. Make sure you go to the portal to fill out the information. What do you do when you don't get your K1s on time as a passive investor? Here's my opinion. All the real estate professionals I know, people who invest in real estate syndication, they are usually entrepreneurs and own a business. It's always okay to file an extension. To be honest, I actually always finish my personal tax returns October 15. October 15 is the new April 15. Okay, so it's 30 is the new 20. In the last 6 years or 7 years since I started investing in real estate, I've not filed my tax on April 15. Now you can say that's terrible. That's like such a bad habit to get into. Once you get into it, that's your new reality. So get used to it.
Okay, this is just our new normal. Okay?
You may not want to do that because you are a hardworking, law-abiding, doing it by the books professional. Fair enough. So then you come to the second, which is if you're a W-2 employee, it's okay to file your taxes as it is. It's correlated because W-2 employees don't have that much stuff to do on their taxes, whereas a business owner has all kinds of things that they need to finish. The first year of that syndication, K1, wouldn't affect your tax return. It's just a paper loss. And because you're a W-2 employee, you're probably not a real estate professional, and so there's not much you can use it for. And then next year, you just file an amendment. So what can you do to be a responsible passive investor during this stressful time for both yourself, your general partner, and the CPA? Tip number 1, read the email that your general partner sent to you carefully. Maybe you have to read it like 3 or 4 times. Number 2, if your general partner asks you to fill something out on their investor portal, make sure you fill it out dutifully and on time. If you feel like your investor portal doesn't give you the right information, make sure you check out Cashflow portal, which has all the information you need. Third is related to number 1, which is try not to ask basic questions. Do some due diligence. Then tip number 4 is not to demand too much. Now is not the time to ask your 10,000 questions. Ask them when it's more appropriate. We are all in this game together. It's a fantastic investment vehicle.
We've got a better chance of survival if we work together.
By the way, I'm not saying this because I'm like salty about my own LPs. My LPs have been great. This is more of a general advice to teach you, a passive investor, to be a responsible passive investor. I hope that's useful. Thanks again for watching. Happy investing.